Okay, so we're still on the paper trading account, but something I just realized, if my account goes to 199, I can't take a trade. So it has to be at least 200 and above. So I don't know, I might likely change this shit to like 250 or so. And the least lot size I can take on TradingView, it's one lot. I can't take a 0.1 trade, as you can see. So the minimum is one lot. And in order for me to take that, I have to have at least $200 and above on the paper account. Well, as you can see, the history still remains. We've only made $9 so far. Yeah, we've only made $9 so far. So I'm going to be showing the history of any trade I took. But today I didn't take a trade because I went out today. Yeah, so let me just break down this trade. So we had these previous New York highs, which I marked out on the higher time frames. And as you can see, on the 1 minute during New York session, we took out those highs on NASDAQ and on SMT, right? So after taking those highs, what am I looking for? I'm looking for a inverse fair value gap or a market structure shift. So as you can see, we inverse this 1 minute fair value gap. Plus, we had a market structure shift. We had this retrace back, but we didn't have any fair value gap. But this is a smart way to trade. After making this market structure shift and inversing this gap, because it closed as a body out of this gap, so it's counted as an inverse. But after making the market structure shift, we came back up to retrace. But as we're pushing back down, we have a clearer, bigger body closure below this 1 minute inverse fair value gap. So this is a good time to enter a sell trade, which just stops at this high or at this high, whichever you wanted. And then we'll be targeting these 5 minute fair value gaps. In my opinion, most likely, I would have closed right here. Like, I'm just trying to be honest right now. I would have closed right here at this 5 minute fair value gap, even though it's not the best risk reward. But look, are you telling me you're going to be here for at least 16 minutes before you close this trade? Because as you can see, as soon as price starts into this 5 minute fair value gap, we're having all these rejections. So let's say you're in this trade and you're seeing all these rejections. Are you still going to feel price is going to inverse this 5 minute fair value gap and aim for this next sell side liquidity? Obviously not, because we are seeing all these rejections. Most likely you would have closed. Like, let's be honest with ourselves. I don't know about anybody else, but me, I would have closed on this trade instead of holding it here. So this is less than a 1-to-1 risk reward. You see the 14 handles win, but it is what it is. And then another trade that I saw which really made sense is this trade right here. After that push to the downside, we have a clear SMT, right? We have a bullish divergence SMT. How do you take a trade off this? I won't take this trade because I don't trade at this specific time. So we've inversed this 1 minute fair value gap plus this 1 minute fair value gap, right? And the body closure. So we've definitely inversed this gap. Now, all we need to see is price having a retrace. And before that retrace, what do we have? This is a clear market structure shift, a really good market structure shift, showing that we're starting to shift structure to the upside. And what else do we see? A 1 minute fair value gap. Price time to this 1 minute fair value gap, and that's a good trade. And then it's just aiming for this previous New York session highs. And as you can see, almost a 1-to-2. And yeah, that's a 124 point win, literally off of SMTs. So these are literally trading opportunities that traders would have caught today. But the one I am most likely sure of is this one right here, because it's inside my own trading window. I didn't trade today, and as you can see, you saw it from the history. This was yesterday's trade. And yeah, that's basically it. And I'll see you guys tomorrow.